Okay, good evening, guys. Just another weekly forecast session just to run through exactly where we are in terms of market structure, top down analysis, TVT, ICT concepts, as well as cluster delta tools being implemented across the board to see exactly where we are in terms of reading market structure, understanding price, and understanding where key areas of interest, key levels, and institutional levels lie on the chart for the week ahead. So when we look at the bear candle chart monthly top down analysis, we can see that the current month, October, that we are in, has actually tried to push up, and we have a rejection wick to the downside, which is now forming the candle up into the now second third of the month. It seems as though it's going to reject down, and we want to see how it kind of tests 50% of this wick, because the monthly wick is an important area for us to also factor in. So for now, we'll just kind of mark in this zone. We're going to get down into markups a little bit later on, but let's just basically take that as a reference point. When we then move down onto the weekly, we can see that the market has come down all-time lows, and effectively there has been a bearish wick down, bullish wick, rejection wick down, liquidity grab below these lows, and then the market tried to push up. It's pushed up. It's tapped into a key level, which is the opening of this supply. The market respected that and has rejected down. So we now want to see exactly what happens into the ongoing week, whether the market comes back up, tests this area and rejects down and continues to test this wick. So we effectively now have two areas of interest. One is 50% of the monthly wick. One is 50% of the weekly wick. Okay, so we can kind of correlate these with our key levels in a little while. So these are two levels and areas of interest that we probably want to watch as fibs in terms of absorption on the higher time frame institutional orders. When we get down onto the daily time frame, we can then see that demand sits in the 50% zone of these wicks at both points. So demand sits here where the market came up, came back, tested and bought out, and then it came back, took highs, and is now due to come back and test 50% of this wick, which is also the demand zone that we are looking at for the market to buy up out of. When we turn on our supply and demand levels now, we can see how it kind of correlates with 50% of the wicks in terms of higher time frame demand down the bottom here, refined demand zones within those on the lower time frame, and also discount levels. So what this kind of tells us is what the bias of the chart could be for the week and month ahead. Now, at the moment, the market is selling down after having taken interim supply here, respecting supply at the top, leaving behind liquidity on the lower time frame and selling down. Now, this move that we see that has been formed is what we are now looking for in terms of discount levels. Now, we've got higher time frame demand already sitting down here. Within this higher time frame demand, we want to see whether there's a short-term bias for the market to buy down, to buy back up, to then sell down deeper. So when we get onto the lower time frame of the 4 hour, we can now see that what we have done is taking these two discount levels, being the monthly wick level here and the weekly wick level here, we can see that they both sit within higher time frame demand and they both sit at areas of liquidity. So this is where the market has come back down, respected an area and moved up. 50% of the monthly wick was respected. Okay, and then we can see that the weekly wick that we needed to target is obviously the one down here, which sits between two levels of demand and an inefficient wick that was not taken to the 50%, and price below that obviously has covered itself nicely, demand left behind on the lower time frame. So when we look at lower time frame moves, we can see that on the 4 hour even, highs were taken here by this leg out, highs were taken here, highs were taken here, highs were taken here, supply was respected here, and that's a wave. So we took this wave from this point all the way up. 50% discount zone for buyers is in here, this zone. Demand, extreme demand, is down the bottom, which matches up with the 50% of the wick. And the market needs to buy down into this, into an area of fair value gap on the lower time frame to then buy up out of this. Now, the reason that this discount zone is here for sales is because supply has been respected at the top. There is liquidity lying there. There are also levels of lower time frame supply above as well. However, because the market stopped at this point, it could be that an institutional seller wants to hold price below this level. So the wave down that has taken lows, this low, this low, this low, could also buy back up out of this interim demand into this discount zone to respect this supply and liquidate in fair value gaps within this zone to then sell down deeper into this demand or even into demand below. Okay, that's the logic. When we look at where we are in terms of 1 hour, we can see demand within discount zone, supply within the discount zone here. There's also supply sitting up here. Okay, so we can effectively on the lower time frame mark supply here as well. We'll use this. Okay, this is also supply, and what we can then do is understand and references that we don't need to mark every single zone because it will get very confusing. Okay, so all we're worried about at the moment is liquidity, interim demand zones, discount zones. So we know which bias the market wants to kind of interpret and take. Now it'll be made clear to us on Sunday whether this demand level holds for buys early part of the week and then selling down, or what our bias should be in terms of a deeper drive down into this to buy up out of to then sell down, which we'll see. We can obviously adjust our markups accordingly. Now, when we look at key levels, let's just sort some of these things out, put the fibs in the fibs, put the supply in the supply, and we will now turn on our key levels. Turn on, okay, so now fair value gaps. Now, it looks a bit crazy, but it should be easily interpreted. Now, what we want to effectively see is when the market starts to move, we want to see it come into an area of fair value gap within a discount zone to then confirm for buys alongside an institutional key level. So an area of interest, which is also an institutional level. Now, I'm going to overlay a lot of things. It's going to get crazy, but I'll explain it when we get down to it. So now when we turn on the key levels, okay, what we want to see is things like this. For example, you've got liquidity lying here where the market stopped out and reversed from. We've got a bullish imbalance that was missed. We've got a fair value gap that is showing here, which really, has been filled, but it's been wicked. Okay. We've got demand sitting here because obviously the fair value gap down the bottom here was respected, and we've got interim levels sitting down here as well. Now, all these gaps in between, we want to see the market come down, liquidate areas of liquidity, tap into areas of interest, tap into a fair value gap, and then buy up out of those zones. So really, if we wanted to be very particular in our markups, we get rid of everything that is, number one, not in a discount zone, number two, not a key level within discount zone, and number three, not a fair value gap within a discount zone near a key level. So example, everything here, 1, 2, 3, 4, all of these can be deleted because we are only concentrating on areas within a discount zone for the move. Now, this discount zone could move depending upon whether the market liquidates lows and continues to sell down to buy out. Okay, so that is the bias, but all key levels are there because they may provide a short-term reaction which we can capitalize upon using the footprint. So confirmations that I'm personally looking for are discount zones above the 50% for buys or sells, and we are looking for that within an area of interest, key levels, institutional levels, liquidity, volume spikes, POCs, as well as it tapping into a fair value gap. Okay, now when we get down onto the 15-minute time frame, you can now see that there's a lot of fair value gaps that match up with some key levels. So for example, within this sell scenario, so from here we sold down, we broke lows here, we broke lows here, we broke lows here, we broke lows here. Okay, and then the market continued to sell, and it continued to sell, took lows here. So this is a sell bias for us. Sell continuation is expected. The market will want to reverse into the discount zone of this wave to continue selling. We want to look for fair value gaps within the discount zone aligned with key levels. So we would negate this because there's no key level that we can see unless it shows itself on the lower time frame when the market enters here with the footprint. This is an area of interest because it's key levels around a fair value gap. This is an area of interest because it's a key level around supply and fair value gap above. So effectively, what we'd want to see is something like this transpire in terms of a setup. The market comes back up, retraces into these levels, comes, pulls liquidity, okay, underneath certain levels, and then it kind of spikes up, takes an area of interest, a key level, taps into a fair value gap, respects the level, comes back, retests, and then sells down. Okay, that's the type of thing that we want to see for a confirmation. So again, the combination of confluences that we are looking for are discount zone on the wave with the bias that is being presented short term because it's an intraday move and we're looking for a scalp. We're looking for fair value gaps within the discount zone. We're looking for institutional levels and key levels within the discount zone and close to the fair value gap. And that for us is the golden setup scenario that we want to see the patterns that we have obviously made you guys aware of present themselves and confirm that the bias that we are looking for in terms of a buy or a sell is what the market wants to do. And that's the only way that you're going to be able to confirm it, by combining all of these points together and then utilizing the footprint and volume and delta to make you understand whether the market is continuing to buy, breaking a zone, or respecting a zone and continuing to sell. Okay, I hope that makes sense. It's a very simple short video. We're in an area of limbo at the moment. It could go either way, buys or sells, but the initial bias on my side personally is for the market to buy up into the discount zone to sell down, and then see exactly where we go from there. Okay, so the remainder of this month may well turn out to be good because we're seeing the market starting to behave. We've adapted our strategy slightly with non-restricted SLs. We are now working towards zones and areas of interest on the M5, as well as refining down onto the M1 with specific candles that we've made you aware of within the Discord chat, which I would highly recommend that you backtest, implement, and try and live test as well. That is how we will be taking our trades. And again, we will see how the conversation goes this week and what we end up with by the end of the week. Trading days have changed. We are now trading Monday through to Thursday and Friday is off. That is now the TVT plan. We are trading Mondays, but obviously with specific confirmed setups and criteria to enter those trades on that given day. Okay, as with everything, drop a message, a DM in Instagram, on YouTube, or within the group chat if you're in the Discord, and we'll try and address and answer any questions that you may have. We are now very, very focused solely on 2.0. Everything else has been cleaned from the past, and we are only looking forward to concentrating on the group chat, taking matters forward until the end of the year, when we'll take a break in December and then decide what to do from there on. Okay, take care guys, trade safe, see you guys tomorrow.